All right, welcome back to BTF 2021. I hope you're having an amazing time so far. Our next panel is titled Omnichannel Delivery for Increased Customer Engagement. Please join me in welcoming our panelists to the virtual stage. And I'll hand it over to Paul, our moderator.
Thanks, Patricia, and hi, everyone. We've got a great topic for discussion here, probably more relevant than at any other time in financial service industry's experience, and hopefully engaging debate to ensue. So let me just go around the table and let's do the introductions first before we kind of kick off to the first topic. So Wenny, do you want to just give an overview of yourself?
Great. Hi, everyone. My name is Wenny Wu. I'm the head of customer experience and marketing at Piermont Bank. Piermont is a digital commercial bank focuses on serving small and medium-sized companies. We opened door in July 2019 with the mission to change the face and pace of banking. We were the first multiracial minority depository institution that's designated by the FDIC. There are only 2 of us in the US among 140 some MDI banks and 5,000 banks in the US. The genesis of building Piermont Bank was simple. We want to redefine the commercial banking experience for small business with technology and innovation. We are building a hybrid bank that combines the best of commercial banking and fintech. So I look forward to our discussion today.
Thanks, Wenny. Kobe, over to you.
Hi, everyone. My name is Kobe Ben-Meir. I'm the CMO and principal at Fintegra, formerly Standard. Fintegra is a small business financing company, and we strive to make small business financing more accessible, easy, clear, and change the reality of small business financing space, the alternative small business financing space, as our name states, fintech with integrity. I formerly was the founder of Edge Founder, which was acquired by Fintegra to make the system more accessible to small business owners using data analysis tools and AI. And now I'm here talking to you about bank transformation in 2021.
Thank you, Kobe. And I'm Paul Mullins. I'm the head of customer for HSBC in the US. I worked in a variety of different jurisdictions over my career with the bank, responsible for both the propositions and the customer experience. As many will know, HSBC global bank, and our focus is very much on how we can define an international experience around the kind of affluent and emerging affluent space. So we're just going through a transformation within HSBC right now to become even more focused on how we can do that in a smarter way, with the customer at the heart of it. So so hopefully really interesting different dimensions, really, as a bank with 150 years old, versus kind of the fintech experience and the different angle that one looks at it. So so it should be fun. So let's go to the first question then. So customers and prospects have changed their behavior dramatically because of the pandemic. Is this permanent, and what are you going to do to address their current needs and anticipate the changing needs of the future? So Wenny, I'll hand that one to you to kick us off.
Yeah, I think, the pandemic actually in an interesting way validates Piermont Bank's business model because we take a hybrid approach to building the banking experience for small business. And that means we automate and digitize everything that the customers do not see, but we still deliver banking services through an old-fashioned way with a relationship manager who spends a lot of time with the clients to understand their business, to give appropriate advice that's unique to each customer's needs. And I think that, the human touch actually is still very important in the small business sectors that we serve. And I think that, for us, one of the big takeaway that we learned from the pandemic is that many small businesses have either pivoted or changed their business model, and they need a banking partner that can pivot alongside with them. What does that mean is that, their financing may look very different from pre-pandemic, because now they have moved, a lot of their products and services selling online. So I think, to be able to look at, the way that they pivot their business and the way that, they require different needs, having the banker who truly understand what that means and truly understand, the industry sector that they're in is actually quite important. And I think that, this change is quite permanent. Frankly, I don't believe that we'll go back to the old world. And, the pandemic, if anything, have accelerated the digitalization, and it really changes how we will serve our customers and how we stay relevant to them.
So Wendy, I find that interesting for Piermont, because you were attracting digitally savvy customers in any case. So in some ways, less about the customer's behavior because they'd already chosen a digital first solution, but actually what they're expecting of you has changed, I think is what you're saying, in terms of your understanding of their changing business models. So less about your business model change, but more their business model change. Is that right?
Yeah, absolutely. So I think that, the small business, I mean, a lot of them are, they either find that they don't really fit into, sort of the product box that a lot of the larger institutions have offer. And especially, I think during the PPP process, a lot of them have find that, actually having someone to talk to and having someone to help them, with the financial advice that they need is very important. But yet, because we're digital first, so, we offer sort of the similar experience that fintechs or other, digital banks have offered.
Yeah. So ironically, it actually accentuated the need for the human in the process, that more so than before, which is kind of almost an opposite from what you might have expected, which is really interesting.
Well, I think that, since the financial crisis, bankers don't really have the best reputation out there, unfortunately. But I think that, at the end of the day, with banks, we're a heavily regulated industry, and, bankers are trained a specific way. And there is that expertise and credibilities that we're bringing to the table that I think has come out, especially for a lot of the smaller banks during the pandemic, and really, step up to support. This is our opportunity of redeem that reputation.
Yeah, very interesting. Thank you, Wendy. Kobe, interested to get your thoughts.
Yeah, well, actually, I can really relate to Wendy's point about the landscape changing. I look at it from a different perspective, because we're a fintech company and we're doing small business financing. The alternative world of business financing usually came hand in hand with personal relations with a broker or with an agent in the company. And what the pandemic did is, first of all, changed the entire way everybody works, both retail and office spaces, and forced everybody to adjust to this new world. Who didn't adjust went out of business. And we saw that in mass scale, especially in the first few months. But those who did adjust changed their perspective from, I have to get this interaction with this person, and I need to adjust myself to be fully online or somewhat online. And that applies also to the financial product world. And that also, that really opens the door for us as a fintech company to say, okay, we did all the stuff we did before with data analysis to underwrite the files better. Now we can take on the next approach of how to open the door to a more simplified world in the digital space. And when you probably can relate to that the biggest concern is the adoption rate with something that's fully automated, and big banks like yours as well, Paul. That's the debate all the time when I talk to peers from Wells Fargo and Bank of America. It's always, where's the balance between the account manager and how much can they do online? And for us as a smaller fintech company, I do think, like when he said, the changes are permanent. the world is not going to go back to what it was. People are not going to back to the office more than maybe twice a week. And retail adjusted as well because they had to supplement some of their income with online sales and not just retail itself. So the behavior dramatically changes the way we look at our business model as well. And we say, and this is also why we decided to rebrand, because we operated under YesLender and now we're Fintegra. And Fintegra really comes from a place to say that we're trying to change how we look at this product. It's not just, okay, take the business financing, pay us back, and that's it. We're trying to build a community and a relationship with the business owner, with the merchant itself, that goes beyond it, but maybe in most cases has no human aspect in it, or has very, very little human aspect. And that's where the technology comes into place, and all the automation tools that we're applying into our process.
So it's almost like more of a kind of relationship build, Kobe, than a kind of a transactional element that you're kind of seeing that you need to build to. Is that right? Is that what you're saying?
It's right. That's the main focus, but we also can't ignore the fact that the landscape of small business itself changed in the US, especially. And you see industries that you used to look at them in a specific light. You have to look at different measures in order to underwrite those files better. Because you can't look at the same metrics we used to look at before the pandemic, especially in industries that has to do with products and shipping and transportation, retail, restaurants, all of these, from being very stable, they became very unstable in our eyes, and we need to find solutions of how we can work with them. And that's the biggest struggle. And this is where most of the focus on new products come into play.
That's a really interesting point. The kind of past performance is not a reflection of future expectation. The algorithms really just kind of didn't quite get thrown out the window, but they really did move dramatically, didn't they, in particular industries, like you just said. I mean, who would have known that the kind of element of the delivery industry, as an example, would have rocketed? And kind of, that's a cost you wouldn't have had to bear as a percentage. Great for some, more challenging for others. So so really, really interesting, Kobe. So I think if I talk to it from let's say a kind of more traditional bank model, and the omnichannel experience, and again, my experience is more in retail. I think there's two things that really struck me. One, obviously, no surprise, was customer adoption of digital channels happened very, very quickly. People that you would never have expected to, or would have needed a lot of nudging to kind of, pick up the mobile and start using it. Well, they all were. So, what that really did was it just accelerated an awful lot of what was already happening. And I think we probably went, I don't know what it would be, but 10 years worth of growth of movement from a customer base is adoption. And I think that's what's interesting and makes this such a useful, kind of debate, really, is you guys have picked up people that are already thinking digitally. We would have a high proportion of customers who that was the last thing that they were thinking of before. So they're kind of going through that journey. But I also agree, they're not going back. And they have expectations of us, I think, that are quite different. And I, certainly my own thoughts on it, and it relates, I think, a bit, Wendy, to what you and Kobe were saying, was, the part of the relationship manager, or the relationship, is even more important than ever before. But I think we have to adapt to the customer better. So kind of the kind of historical model would have been, and probably where your customer base would have gone to, is if I'm purely just want to do digital, I don't want to ever see anybody. I want to go to a digital bank. I won't have any interactions. I'll get what I want, off I go. Well, the kind of new model says I might want that today, but I might want something different tomorrow, because I don't know what the future looks like as well. And when there's a huge bunch of uncertainty, which you can't build an algorithm to, that's where the relationship plays. And you need that. So the personal piece is super important, but it's kind of more making sure it's there for them when they need it. And I think that the old model also would have been not omni-channel. We might have said that, but the reality is, if somebody said they never wanted to see somebody in a branch, we might have put them in our direct channel, as an example, or we might have assumed, not necessarily HSBC, but other players as well, have a digital bank. So we just put the customer over there. That's where they're going to be happy. But the reality is they may only want that for a period and they may need to come back. So again, I think adapting ourselves to the customer rather than making the customer adapt to us is the future state, and finding smart ways of doing that. And I think also that's where the data comes in, because you kind of got to find out when the customer's waiting for that trigger, because sometimes they don't know that. They don't know that that's the value add that can come. So I think that's the data thing, isn't it? Because as soon as you start to see a reason, something not quite working, that's when you need to reach out to these people to add the value. Yeah.
Well,
So
I'm really happy to hear that you from a bank's perspective are looking at it like this, because it was always that was the biggest challenge for big banks of how fast should they scale out these changes. And for us, for us in Fintegra, at least as a fintech company in its definition, we have to look at the business owners as adaptable as possible, but we also have a lot of customers in our database that are more of the traditional business owners that need the help to adjust to these new technologies. So if I'm comparing what you said, Paul, I can take the example of the COVID vaccines and say, the governments helped push that technology 10 years forward in a span of few months. And it's the same as what happens with banks and financial institutions now across the globe that are outside of the scope of the fintech in its definition.
Yeah.
Well, I think that Paul, you had a great point about the difference of what the customer wants, right? I think when it comes to the depository side of the services, banking services, it's a lot easier to do self-serve. So we look at what fintech has changed how a lot of the individuals have bank, how the personal side of things have bank. That it's a lot easier to do self-serve. And the difference is only when you have a problem, you want to make sure that you can call someone out, or you can chat with someone and resolve that issue. But I think that for the business side of things, especially in the commercial banking, it's a lot harder to say, okay, I want to self-serve, because you still need a line of credit. Your financing needs are constantly changed. So how do your banking partners stay changing and relevant and offer you something that works for your business? I think that credit knowledge and that deep industry expertise is still key to help the small business owners to get financing that works for their growth.
And I think another point is that go ahead, Paul. Sorry.
No, go ahead, Kobe.
From what when he's saying, one point that jumps into my mind, you two are the actual banks. From my perspective, we also have the challenge of, with all the adoption rate that's going up, how do we make the business owner trust our service enough in order to connect their bank accounts and digital assets for us to analyze in order to give them access to the financing? So it comes hand in hand with the adoption rate. But when you look at it from, I'm your bank, you have more trust with the merchant than from our eyes that we're an external company that wants to give you the financing. So how do I create that trust? And it's just different because I need to work a bit harder, I assume, than when you hold the bank accounts in your own database.
Yeah, I guess it's, you're absolutely right. You're kind of working from a more of an existing base that are adopting to different channels, which ironically, in some ways, I would have thought, Kobe, and HSBC is a smaller player, of course, across the US. But as small business owners, and for Wenny, I would imagine this for you too, as small business owners start to adopt and understand technology, those that would never have touched fintech or a computer, suddenly, you're an interest to them, aren't you? Because their eyes are opened. But again, Wenny, as a bank, it's a bit easier because you can build a relationship. At Kobe, it's how do you create relevancy, isn't it, for them in terms of that immediacy? So it's really interesting.
Well, that's also why we actually work with a lot of fintech, and we are one of the sponsor bank in the banking as a service industry. It's that we power through our platform a lot of the banking services for the fintech. So can absolutely relate to what Kobe was saying is that, you know, a lot of times you just need that extra step to build the trust. But there are the experience that fintechs are creating that, you know, is far ahead of, you know, what we can do as banks.
Well, I think I mean, the great thing for the consumer is there's choices, isn't there? Because, you know, if you want the traditional banking model, which is no longer the traditional banking model, but if you want that avenue, it's still there for you. But, you know, platforms are now being created. You know, people have been thinking differently about kind of how you can interact with your services. And it's, you know, app based, and you can pick and choose your financial services from a sort of, you know, smorgasbord of opportunity, which again, that's how the technology's moved, isn't it, really? Which, you know, Kobe, you'd be part of as one of the, you know, providers to, wouldn't you? So it kind of, these things are, I think what's great is there's more choice for the consumer, because the consumers become omni-channel. You know, we just need to, we have our challenge because we need to build the technology more. You guys have the technology, and you need to build the kind of relationship piece more, which is really interesting. So,
and actually we see a big trend of fintech companies like us partnering with banks with all different sizes and offering
HSBC
banking
has done it too,
services. You know, you have, you know, like Amex and Cabbage and Innova and On Deck and Bluevine and PayPal. There are so many companies doing banking now, in addition with sponsorship with banks like yours. So that's very, very interesting to see.
Yeah, and I think that, you know, what it really helps to me as a really positive outcome that I've seen in this bank fintech partnership is that it really, you know, offer quick and immediate services and access to some of the communities that are far underbanked. So that I think, you know, it's been really positive, you know, as a result.
Well, that's one of our challenges, right? Not being biased, and technology is usually, it's something we need to address manually and not just trust the data that's going to do the job for us.
Yeah. Well, I think the whole thing around how you get that cost to serve to work so that you can properly service that community is a key, and that's about scale, isn't it? So you need all manners of the customers to enable that to really happen. Fascinating. So we may only get through to one question at this point because there's so much to talk about. Maybe we could go to the next question. So how have you moved to delivering omni-channel experiences to your customers and prospects, and what is still missing from your delivery? So maybe Kobe, do you want to take that first?
Yeah, sure. I'll start by saying that the Omni approach is in the base of everything. I think any digital business starts operating with, because you can't really just work on one channel or one aspect of the lifetime value of the customer. You have to work on all of them together. And it's not that we moved to do that, but we actually pushed that harder than what we originally had. Because if at the beginning we planned our strategy more on a set of few channels with something completing that from the offline world with brokers and other business partners that work with us, we moved into having what we had before in place and adding to that complete strategy around all the different channels, from social media, you know, TikTok and Facebook and Instagram and all of that, which for some reason a lot of banks like ours don't really expect the merchants to be on, which they are. And all the way to new platforms like the Hulu self-serving ad platform and Amazon and places that are a bit more far-fetched for us to get customers with. But when you change your perspective to look at the businesses instead of as business, but as a business owner, as a customer behind it, because the business owner is a customer of all the services that anybody advertises on, then you catch a lot more, and your net is much wider. And this is what we're focusing on. We're focusing on as many placements as possible that are more relevant for our target. But something that really changed in the last 12 months during the pandemic is the way we target those channels. Because all of us have less and less targeting options as the time goes by, and all the technology companies keep limiting us. And the main focus right now is basically the lookalike targeting based on existing databases and customers that we have, which works the best out of all the targeting options. Moving forward, as well as more advanced retargeting approaches that instead of just looking at potential customers that started the process, and focusing on them with higher intention, we actually take it a step back and focus on the lower intention targeting options as well, in order to widen the net even more, not just with the new targeting, but also with that, and that with all the channels and the lifetime cycle of those customers, from the exposure point to returning and renewal point, in our case, we try and focus the messaging and the content, which is big in our strategy, what content we deliver into what channel and what cycle of the lifetime of the user. And I think, I'm sure you'll agree with me, the content is what matters here, right? What do we present to the user? And I see Wendy smiling because that's what we focus on.
That's like a majority of what I do nowadays. It's about content. It's about offering valuable content.
The content, the product, the right time and the right place, and a lot of testing on what's the right time and the right place to serve that piece of content to the right target that we think is relevant for.
Yeah. And I think, on the content piece, you also want to offer something that is truly valuable to the customer, right? It's, I mean, nowadays with so much content online, like people can easily identify whether this is a self-serve versus, this is something that truly has value, that offer a true truth or insight into a specific, business. So I think that, that's going to be, that means we need to put in, a lot more work.
You don't want to sell it too much, right? You don't want to sell your product. You want them to want your product.
Right, absolutely. I mean, for us, I guess, we have the advantage of building, an omni-channel experience from zero because we're new. So we don't have to, retool a lot of things on our end. But, it's about, for me, as the head of customer experience, I focus on expanding the channels and, ensure that there's consistency and flexibility through how we deliver. And, whether it's whatever channel that the customer wants, it's that consistency and our team can respond in the same way. And that has been, something that I think we need to do more.
Yeah, again, it's a completely different dynamic when you're dealing with again, a traditional model that's moving fast into, a customer's expectation around an omni-channel experience, because they didn't start with digital in mind, but they now have digital. So ours is a lot of catch up from the channel perspective to make sure that we can fulfill. I mean, there's a few things we probably deployed it in months when it would have taken us, not years, but significantly longer. And probably not also necessarily the fact that we couldn't do it, it's the prioritization. So an example would be ability to use Apple Chat. Suddenly we moved that really fast to be able to fulfill, because that's what customers were wanting for. Before, we didn't really have that kind of capability, but we needed to move it fast because customers were connecting and contacting us in and wanted to use that channel, whereas before it would have been a telephone call. And then also what we found was needing to kind of move to be able to allow customers to move from app to desktop, in terms of their ability to interact with us, which of course we didn't build ourselves with that as the first thing that we needed to do of a chat. You'd have thought of that straight away. So for us, it's kind of building in, the insights that we saw, customers were wanting and needing to us, because they, clearly they weren't coming into the branches. I think it was interesting. I think, Kobe, you were talking about, more from a kind of acquisition standpoint in terms of providing the content to kind of, hook the customer. And it's interesting. We just have it is the same challenge. Ours was interestingly different in that we brought in different products for customers. But because customers, we reduced the ability to talk to customers, because people weren't coming to branches. Nobody answers their phone anymore because every other call is not a call that you want. So that channel kind of reduced. So we ended up finding that actually the way that we needed to use our kind of some of our content was actually to talk to existing customers through through external channels, which we wouldn't necessarily have done before, because we needed to find different ways to kind of hook them in, versus relying upon our ability to interact with them, through kind of more traditional means, through email or even through in-app notifications. So kind of different slant really, that we found that we needed to do to sort of build the business. But again, it's kind of trying to manage lots of channels with different customers thinking differently versus the kind of the initial mindset that you have, which you can build upon. So it's really interesting.
It's interesting to me to know if you can answer that.
Yeah.
Do you think that because the organization is bigger and more established, and you kind of need to patch on existing systems and existing infrastructure, all these changes, do you think like you're collecting the right data points? Because for us, data is, and I'm sure for you, data is also really important. And if you're not collecting all the right data points on the user fronting side, then what are you going to do later on? Like, do you feel like you're building it the right way, or do you feel it's patches on patches?
I think it's a great point. So yeah, I know you're absolutely right. Data is absolutely key to the future state, because we need to build models that work from a kind of as much as kind of the right cost to serve, but also ultimately to be able to get the right interactions with the customers, because you can't, it's harder to get people to, let's say, pick up the phone. Right. You need to be able to reach out, have the data to be able to reach out to them in a different channel to say, we've noticed this, it would be good to contact you to discuss things, so that there's a reason for being. So the collection of the data is key. I think for us as a business, we have probably more data points, which we need to then bring in other, external information for. But it's just, it's how do you manage the prioritization of the data build together with the channel build, together with, the other elements that you need to do to keep the BAU going. So it's kind of like, you've got the existing horse running that you still need to keep and maintain and feed, whilst you bring on the new stuff. So it's always that difficult balance, in terms of trying to get that right, and actually having more channels to feed to as well, because you've got, you've obviously still got a branch network. You've got people that really still want to deal with that. So how do you choose the right way of doing it? Not everybody's still using digital, so it's a slightly more complex. But the challenge is really kind of prioritization, frankly. As you go through, the build. But one of the things as a business we've done is we have reprioritized ourselves through the pandemic to become more focused on, what our strengths are. So we're now very focused on international, because that's what differentiates us. We're focused on how we're going to deliver, an outstanding kind of wealth management experience, and how we can make that kind of globally relevant. So I think that's helped to focus our mind about doing a great job for a more narrow segment, rather than trying to be, maybe all things to everybody. So I think that's one of the biggest differences we see. And ironically, the pandemic just accelerated that. The thinking around the need to do that. So yeah, interesting stuff. So maybe we should go to the next question. So what channel or platform is your strongest currently, and do you see this staying firm or changing over the next year or 5 years? I guess we could answer that from a acquisition standpoint as much as a kind of distribution standpoint, couldn't we, as well? So maybe Kobe, do you want to take that?
Yeah, for me, it's a very short answer, and like we're focusing a lot on social media and all the platforms, not just one. And it is the strongest channel for many years now, especially now with all the changes that all the businesses went through, and all business owners are going into social media to find more information. It becomes much more reliable than going to Google, for example, to search stuff. Yep. You get a lot more information and a lot more one-on-one point of views, and not just what the company is trying to sell you. And I do not think it's going to change in the next 5 years. The reason is because you see the networks keep evolving, and we keep having new networks and new products, and older generations, the business owners themselves go on the younger channels like TikTok, today. So I do not see that changing even in the next 10 years.
Yeah. So do you think that the kind of core social media platforms that you're focused on will still be the same social media platforms, or do you think as TikTok grows, you'll need to have a TikTok experience for your customers?
So I don't think that the networks will stay as they are, because they keep evolving as well. And we just saw the news what Facebook is doing with all their networks together. So I do not know where they're going to be in 5 years from now. I do know the database of users using those platforms is not going to go away anywhere. So regardless of what name and what face the platform is going to have, it will have the same users on it, and more users adding to it every year. Even the younger generation that's going to become business owners, and the older generation that adapts itself to fit what we're doing. So it doesn't matter what the platform is, because we have about 7 platforms right now, and each of them has different type of content. But the users that are using it, that's what matters, and that's not going away anywhere. That's where the value of all these companies is coming from, not the technology.
Yeah, I definitely agree that from a customer acquisition standpoint, I think social media is, what we need to focus on. However, I think from a customer service standpoint, that is, I feel like we haven't really, as banks, figure out, what is the most appropriate ways of serving customer via social media channels, because we are holding a lot of sensitive information, and there are some discussions that probably shouldn't take place, in some of the channel like that. So how do we, create a customer journey for the customer so that their pain points and their problems gets resolved very easily, so that they don't have to, pick up the phone and call. They have more ways to interact with us if they choose to. So I think that is something that, we are also constantly thinking, because the customers' needs are changing faster than ever. So, our team are constantly thinking about how can we deliver that product, because it's really, banking products and services in today's world is a little bit more commoditized. It's more about how do we deliver, right? And that process, I think, involves a lot of reevaluating, reassessing both products, process, and people. And this, I think requires our whole entire team, from the CEO to frontline to operation, to constantly be rethinking about how do we reach beyond our comfort zone, and how do we relearn some of the things that need to be learned, some of the new platforms that we need to be on.
Yeah, thanks, Wendy. Yeah, I mean, just my own perspective is, I think for sure, I think from a servicing standpoint, I think that will continue to evolve and become more efficient. How you create secure channels within social media, I think it's going to be critical. And I think that ultimately the servicing model for customers will get better and better and better, because actually that will be made available, I'm sure, through, if anybody's got any kind of interest in making that happen, of course, the platforms have, haven't they? Because if you can service in a secure way, then that's a platform you're going to go to. So, and I think that will be customer expectation as well, by the way, for sure. So we'll have to meet that need. I think that you'll still have the same core channel experiences available. I just think that they'll move over time, because ultimately the one thing about financial services is it's scary for many people still, and it's complex still. So there's always going to be this element, I think, of kind of how do you create or overcome some of that concern for customers. And I think the more complex that is, the kind of more likelihood of a kind of human interaction at the front end of that experience is going to be there. And again, that's a kind of value exchange always with the customers, isn't it? So can you build experiences for the customers that helps to educate them, to help them to self-serve in really clever ways? I think that's one really interesting thing. So how do you educate and build people through so that they build a relationship with you that means that they always know that what you need is there, and you've built kind of experiences that actually educate them, gamification, whatever it is. I think that will be one element to it. But I think that the kind of personal piece, the human interaction, I think is still going to be there, because that's a kind of a bond and a glue that is very kind of customers like, and I think it was also a really important part of it. How you deliver that could change completely, because I say a human interaction, maybe it's a kind of virtual human interaction, you know what I mean, and maybe that person, you end up being able to the experience adapts to the individual, so that intuitively the type of person that this person's most going to be able to connect with and interact with, and maybe something like that happens as well. So all really kind of interesting things that I think will evolve over time, in terms of kind of how we make the experience better.
Maybe I can offer another perspective on the services side, is that it's not there yet, but it's going to that direction with the conversational AI abilities. That there are some tools today that might fool you that it's an actual human. So it doesn't really matter if it's a human interaction. It's more of how the customer feels they're being interacted with. And another thing to think about is also, if most of our communication stays on social media or places that we do not own, how do we keep ownership on the data? And not share it with those companies, which are questions there are still to be answered. We don't have complete answers for them. So
absolutely.
Kobe, I think sorry, Wendy, go on.
Oh, I said that, the customer's expectation for banking services today is compared to the best brand experience that they have, right? So as banks, we're not just competing against other banks or fintech players, but some of the big technology platforms that offers a seamless experience. And I think our customers now expect that. So we need to move fast so that we can stay relevant to them.
Yeah, I think they set the standard, don't they? Kind of, again, time will tell whether the big the big tech companies can kind of cross over into financial services in a way that a couple of them have dabbled before, and it's not completely worked, has it? So question is what they will crack it at some point, but what will that look like? But like, Kobe, I love your point around the AI, because I think that is what it all comes down to, because today it's quite hard to fool you completely on the AI when you have you all know when you have a really good interaction and it's AI, but it's good, it still feels good. It feels like a human interaction, doesn't it? But you also know when it's bad, it's really, really bad. And so how that kind of evolves, I think, and it does need to be a bit more sophisticated in financial services ultimately, because it is more complex. The broader your business model becomes, I guess, in truth. And so for us, it's more wide. But when you've got a more specific kind of product or service, I think you could probably build something that's really kind of interesting that can cover kind of most angles. So I think
you're positioned really good. Like big banks, the bigger institutions are positioned better to do that as the technology evolves, because you have more data on those interactions with the customers with the different products. So the more data you have on how that interaction went and what the content of that interaction was, you can build a better tool to serve your clients than companies like us that needs to go and use tools either from other companies or something we develop ourselves and collect the data as we go.
I think you're right there. And also I think again, that beautiful skill of a combo between the true human interaction and the AI interaction that's seamless, I think is where you really win, because when you get the real value conversations in front of people through that technology, I think it's a win-win for the customer and for the companies as well. So so I think we're kind of coming close to time now. We had lots of questions and we kind of got through, I think, 3, which kind of suggests something that certainly that there's a lot of debate, and there's a lot more we could be talking about within that particular experience. So maybe any kind of last thoughts, Wendy, on how you see the omni-channel experience kind of developing for your company?
Well, for us, I think we continue to innovate in terms of our technology, our process, because I think at the end of the day, technology, there's a lot of improvements out there. There's a lot of readily solution out there. But for us as a commercial bank, we are really trying to figure out how we can have the same innovation and same disruption that fintech has done in the consumer banking space, that we can bring it to commercial bank, automating the credit underwriting process, which, I don't think anybody has truly figured out how to do it. Maybe for the smaller loans, but, not for your, $1 to $10 million or $20 million loans. So how can we automate that process? That is something that, we are continuing to make investment, continue, like I think, you guys mentioned using AI technology. How do we, help create a commercial banking experience that can be seamless, that, is helpful and relevant to our customer?
Thank you, Winnie. Kobe.
Yeah, I can really relate to the underwriting part of things. That's a big focus on what we're planning to scale out in the next 12 months. And that's what I focused on in the startup before they acquired us. So I think moving forward, the business owners will want to see more flexible products, or want to see that we have the ability to adjust our offering to their business and not the other way around, which used to be the traditional way, and really simplifying the process, making it much more accessible without making it very clear, in terms of what to expect, the interest rates, the conditions, the termination clauses, all of the stuff that used to be hidden, they had to dig into the terms of use to get, needs to be very clear, because there's a lot more competition and they can go somewhere
Thank you,
else.
Kobe. And just finally from me, I think it's building it around the customer ultimately. What the customer understanding what the customer really wants and building that experience around them, rather than, kind of maybe if we look back, it's often been built around kind of what the bank or the financial institution would like to happen versus what actually the customer would want to see. So thank you, Winnie. Thank you, Kobe. Great conversation. Appreciated getting an opportunity to meet you both.
Thank you.
Yeah, thank you. We enjoyed the conversation.
Wow, thank you all. Winnie and Kobe, thank you for sharing your thoughts. And Paul, thank you so much for moderating for us today. This has been awesome. And I know this virtual audience is giving you a huge virtual round of applause. And for the audience, it's time for you to make your way to your next session. Along the way, make sure you accept your connection request and take some time to check out our amazing exhibits. Thanks so much, and we'll see you around.